The Wall Street of today is not so much a physical thing as it is a concept. It's true there's a street in lower Manhattan, an 8-block stretch of high-rise buildings dominated by financial institutions, but for the layman, it's not about a location, it's about the hierarchy. It's about the financial elite. Wall Street versus Main Street is not city versus country. It's not red versus blue. It's uncapped billions versus an hourly paycheck. And today, I want to tell the story of how memes conquered capital and institutional power. What is a meme? Simply put, a meme is a small bit of information that percolates through the social fabric of whatever space it is released into. Memes are vehicles for humor and information which can be rapidly shared between individuals, especially online, at a viral pace. Often a reflection of culture, politics, or social constructs, memes can become a worldwide movement or a national pariah within hours. Once born, a meme can be replicated or shared an infinite number of times, utilizing social media especially to reach an audience far larger and more diverse than almost any other form of marketing on the planet. Memes typically burn out like a strip of magnesium in the fire. They become a viral sensation, wither, and die inside of a week, and even more importantly, they are typically constructed around niche online groups, such as a specific video game, for example. However, on rare occasion, memes can become a bridge between communities, operating as a sort of rallying cry for a common cause. And that is what has happened with GameStop, AMC, BlackBerry, Nokia, and a great many more companies. It all started with GameStop and a subreddit called Wallstreet Bets. This little community, small at the time, would begin to research and support a dying retail video game chain store called GameStop, or GME. GameStop was a beleaguered business practically destroyed by the pandemic. Their stock had become one of the most shorted tickers in Wall Street history, and the Reddit community of Wallstreet Bets decided to try and change that. Over the span of many months, the movement grew and grew. A few shares here, a few shares there. Certain figures emerged as commonly accepted leaders of the cause, posting complex analytical breakdowns of the company's future prospects, and eventually, the whole thing went viral. GameStop went, seemingly overnight, from a dying retail dinosaur in a digital world to a blazing centerpiece of financial warfare. What started as a movement of genuine interest aimed at profiting off a dying company with more potential than Wall Street might have suspected originally became a weaponized method of hurting the financial elite, and more specifically, short sellers. Short selling is a very risky investment. On the one hand, if you buy a company at $20 hoping for it to rise, called going long, the maximum amount that you can lose, period, is the $20 you initially invested. On the other hand, if you short sell a company at $20, the maximum amount that you can gain is $20, which assumes that the company quite literally goes bankrupt and closes down, while the maximum amount that you can lose is theoretically infinite. If that $20 stock goes to $500, you now have to repurchase the shares at a $480 loss. That is exactly what happened with GameStop, facilitated by memes and viral interest. At and near its peak, a $100 million leveraged short position in GameStop posted January 8th was requiring over $2 billion to close. The most short-sold company in Wall Street history went from $4 a year prior, $4 per share, to nearly $500 at its peak, and then persisted with extreme volatility in the 200 to 300 range ever since. Wallstreet Bets exploded from a community in the hundreds of thousands to an army of over 10 million. And this viral growth, bolstered by memes about diamond hands, ape armies, and chicken tendies, not only beat Wall Street, it changed it forever. First, Citron, commonly referred to in the meme communities as Shitron, after 20 continuous years of publication, suspended their short reports completely. This was a direct response to the GameStop short squeeze, but more importantly, it was a result of the meme-driven ape army spilling over into multiple other companies that they targeted. These short reports had become a kind of rallying cry on their own, where retail investors by the millions would pile into and prop up the tickers that Shitron covered, thereby destroying their positions in the stock and costing Wall Street untold millions in the process. Second, almost in tandem, Melvin Capital, a hedge fund that had been betting quite heavily against GameStop for many months beforehand, nearly went bankrupt and was forced to receive a bailout of almost $3 billion. This occurred in late January of 2021, but GameStop would not return ever to previous lows, and Melvin Capital posted a 53% loss for that month alone. That's crippling and devastating for a company built purely on manipulating markets for consistent personal gain. More interestingly, the Melvin Capital bailout came courtesy of Citadel, a market maker who front-runs trades made by retail investors through the Robinhood app. It's a complicated process, payment for order flow, PFOF, but effectively it means that Robinhood is financially beholden to Citadel and sells them all of their user trade data. When the buying frenzy for GameStop hit its absolute peak, Robinhood flat out disabled the option to buy, only allowing traders to sell, specifically retail investors, thereby killing all momentum on the stock for a key period of 24 hours, which is still generally believed to be the turning point that literally saved multiple institutions from going bankrupt. Rumors abound with regards to why and how this happened. Speculation that Sequoia Capital made calls to the White House, that the current administration was involved directly and pressured Robinhood to shut down purchasing, theories that the market was so disrupted by these events that we were 30 seconds away from an actual financial collapse. And it's difficult to say with any degree of certainty whatsoever what is or is not true, but one thing is certain: GameStop had made an impact. In the aftermath of GameStop itself, other companies became targets. AMC, the popular movie theater chain, is now a sort of cult icon in the investment world as rumors circulate regarding their shareholder recount and the potential for billions of synthetic shares to be found in the market, which would spur immediate and decisive action by the SEC. Regardless of where you fall on that topic, collectively, between AMC and GameStop, short sellers have lost a combined $90+ billion in 2021. That was just in January, and there is no end in sight. Most recently, White Square Capital, a smaller hedge fund based out of London, has shut down completely and dissolved in the aftermath of their disastrous loss betting against GameStop. And though it's not one of the largest financial institutions out there, it shows that a single stock driven by an army of Reddit users and memes can cripple, even kill, a hedge fund. But that's not all. Syndicator Capital, a Wall Street quant fund, was discovered to have been scouting and recruiting via LinkedIn for a sentiment trader, which was defined as someone who has been a member of retail investing forum Wallstreet Bets for over a year, has over 1,000 Reddit karma, and also possesses a refined taste for memes and a sense of humor. It went on to clarify that there is no higher education requirement in economics or finance, and asked users to prove that they are free from any mainstream financial brainwash. Meme-driven retail investors have fundamentally changed the entire risk profile of Wall Street. When I say that memes beat Wall Street, I'm not saying that they destroyed the entire financial overclass. I'm saying that they killed a hedge fund, flat out, and would have killed multiple more if not for drastic mitigatory action. They caused government oversight to be levied against a set of institutions that largely control the government, who successfully dodged that scrutiny in almost every single previous instance, and they caused their enemies to try and adopt these new tactics as well through highly paid formal staff picks. The entire premise of short selling got turned upside down. A prominent Wall Street institution stopped their 20-year publication because it had become a sort of quasi-hit list against companies playing by the old rules. And in a market that has been largely accepted as a casino by the average American, the house always wins and Wall Street is the house, retail investors, rallied and accessed by memes and viral enthusiasm, quite literally changed the rules. Instead of relying on what the analysts say, they bankrupted some of the analysts and caused others to require bailouts. They uprooted the established profit model of major funds by exposing them to the actual risk that they take each and every day, but are never actually subjected to. Case in point, in the aftermath of coronavirus briefings early in 2020, certain US politicians were caught selling large portions of their investment portfolios specifically to restructure into technology companies like video conferencing and remote workplaces. One of those senators was married to the chairman of the New York Stock Exchange. Memes beat Wall Street. They didn't kill the entire corrupt institution, but they caught it hard on the chin and made it bleed. Not every single hedge fund or investment bank was shorting the GameStop ticker, but enough of them were so that a 1,000% increase when factored against their levered capital was enough to disrupt and damage their crooked, rotten structure in a way that they will hopefully never forget, and ideally will only get worse. The financial elites in this country don't want you to know how to invest. They don't want you to be able to utilize your own capital. They want you to be financially illiterate to a point where you must invest your money with them as a gateway to access the market, period. For a time, retail investors weren't even allowed to have access on their own, but eventually that barrier has been chipped down to a point where now the masses can have access to the markets, even if they will just disable the option to buy when their exposure becomes too much, in which case I am of the mind that a financial institution who encounters a problem like that should be forced at point of gun to go bankrupt and ripped to shreds for any recoverable capital at all to pay back those that they owe. They should be left out to dry. Now that the wider public has access, even if many of them still don't fundamentally understand how those markets even operate, they can be galvanized and coordinated by community-driven initiatives, and in this case, memes. GameStop was a company being targeted by a corrupt financial class who would directly benefit if the company went bankrupt and all of those jobs disappeared, otherwise known as going to zero. And through viral memes and community enthusiasm, it became a beacon on how to hurt Wall Street, like they so very much deserve, in a world where risk and reward have become some sort of demented abstract. Memes beat Wall Street, and I'm just happy I could be a part of it. That's it. If you want to support, there are links down below, primarily Odyssey, which is a YouTube platform alternative, which greatly supports their own creators. Also locals, $5 a month to keep the channel moving along. There's another YouTuber to check out, merch, social media, etc., but I'll cut it there and stop rambling. As always, thank you all for watching, and have a nice night.